Independent financial services provider and investment house Unicapital Group sees a pickup in investments in the Philippines thanks to easing interest rates and cooling inflation. Lady Vicencio with the full story.
Easing of key policy rates and cooling inflation signal a positive outlook for equity capital markets, according to independent financial services provider and investment house Unicapital Group. But with the Bangko Sentral ng Pilipinas reducing interest rates at a slower pace than it expected, Unicapital has lowered its year-end target for the Philippine Stock Exchange Index to the 7,000 level from an earlier projection of 7,200.
We were expecting 75 up to 75 basis points rate cut for the year, but now we reduced it to 50 basis points, and we had the first 25 bips this month. So we're expecting one more, probably October or December of this year. Hence the decline in our index target.
Unicapital expects stock prices to rise this year, with earnings per share growth projected at 11%. It remains optimistic that the local market is making a gradual recovery back to pre-pandemic levels, as lower interest rates should boost consumption.
It's starting to pick up as I see it when you see interest rates right now, and they're seeing it already starting to stab that. And there's a gradual shift right now to equities. I'm not saying that it has normalized, but somehow when we're seeing now further, again, reduction in interest rates by the BSP, then we should see more interest right now, more momentum going towards the equities market.
For the property sector, lower mortgage rates for residential properties are seen to increase demand by the first quarter of 2025. Properties outside Metro Manila are more in demand, prompting prices to rise faster compared to properties in the metro. Residential sales are seen to rise by 9% in 2025. Leasing businesses are also projected to expand, with the demand for business process outsourcing companies rising by 70%. The strong BPO demand is expected to offset the impact of government's ban on Philippine offshore gaming operations. Unicapital sees the ban to have a negligible impact on its covered property stocks, as most of these companies have minimal exposure to POGOs. Hotel occupancy is also seen to improve by 2% on the back of more tourist arrivals this year. For 2024, Unicapital projects the Philippine economy to grow by 5.8 to 6%, treading on the lower end of the government's growth target. While economic growth is expected to be driven by higher consumer spending and government spending through infrastructure projects, headwinds loom, such as geopolitical tensions and if interest rates remain elevated. Lady Vicencio, ABS-CBN News.